Hello, everyone, and welcome to this Your Overseas Home webinar, Financial Planning in Spain, Wealth Strategies for Expats, Retirees and Investors. Now, I see that three of our most read articles on the Your Overseas Home website have been about the proposed new buying tax. So we will definitely come back to that later if you're at all concerned about that. But I'm delighted to be joined by Robin Thornton from Holborn Assets, who is down in Soto Grande, quite close to Gibraltar, and he's already been telling me how great the weather is there, certainly compared to the UK. Robin, introduce yourself and tell us a little bit about Holborn Assets.
Yes, thank you. Thank you for that introduction. Yeah, nice bright blue skies today as I'm looking out of my study window, so shan't make you too jealous. So let me just kind of move on with a couple of the slides. So a little bit about Holborn Assets. First of all, we're a global wealth management company. Obviously, we've got offices here in Spain, in Portugal, Cyprus, and about another 15 or 16 around the world. So about 500 employees. Asset management, pensions, investments, life planning. Our tag is right money, right place, right time. So that kind of sums us up, I guess, in some respect. We've got about 20,000 clients and about $2.5 billion worth of funds under advice. And we also have a global mobility division as well within Holborn Assets. Which is very much about visas, golden visas, entry permits, etc., and different types of visas for different countries. Really, myself, I'll just quickly run into myself. I'm a chartered financial planner. I'm getting a little bit grey, shall we say now. I look after about $20 million worth of client funds. Been here in Spain. I'm down in the south, been here 8 years now as well, so got a great understanding of especially Spain, UK, cross-border tax planning, stuff like that.
Excellent. Right, thank you. And my name is Christopher Nye. I'm the senior editor at Your Overseas Home, where our aim is to keep you informed, inspired and moving towards your dream life in Spain. So today we're talking about discussing financial considerations, tax, pensions, investments, that kind of thing. We're moving to Spain. We've got 30 minutes. We're going to have a presentation from Robin, but most of all, we want to hear from you. So questions, comments, plans, please type them into the questions tab, which you should find on the right-hand side of your screen. And just to get you typing, just to get you using the tech, tell us via the questions tab where you are in the world now. I think we'd find that interesting, and maybe whereabouts in Spain you're hoping to move to as well. Last housekeeping matter, if you need a reminder of anything discussed today or you want to share this with family and friends, a replay will be available on the Your Overseas Home website to watch at your leisure. So on that note, over to you, Robin.
Thank you very much. Right, let's crack on. There's a lot to get through today. I can't reiterate this enough, and I'll usually say it about 5 or 6 times, but it's very, very important to get a bespoke professional advice for your circumstances. What I'm telling you today, or hopefully explaining today, is quite generic. So every client I've ever come across has always got individual circumstances. So just kind of bear that in mind. So let's, this is what I'm going to run through today. Again, fairly quickly, talking about paying tax in the correct country, pensions, immovable assets, ISAs and other investments. This is also applicable not just for UK citizens or residents as well, but obviously, you know, if you're coming from the States, it's basically the same, pretty much whichever country you're coming from, but I do obviously lean a little bit towards the UK. A little bit about Spanish investment bond, which is a solution to a lot of the kind of issues that come across. A little bit about taxes in Spain generally, ones to be aware of. So first of all, tax residency explainer. Let's just get this right. You are a tax resident in any country if you spend more than 183 days in that country, or you have a center of economic and cultural interest. Okay, that's really important. So people perhaps get confused sometimes and are paying tax on income because their company's based in the UK, for example, but they're living in Spain. Wrong, absolutely wrong. So 183 days in one country, or a centre of economic and cultural interest. And that is because sometimes people don't spend 183 days in any country, and they might have an apartment here and they might have a home there, and they're moving around. So you have to have a tax residency. Okay, so a little bit here on paying tax in the correct country in terms of pensions. Again, this is fairly generic, but government funded pensions retain taxing rights in the country of origin. Now, the definition of a government funded pension for UK would be, for example, if you previously worked for the prison service, the police force, the parts of the NHS, not NHS Trust, but NHS government, etc. So those will retain taxing rights in the country of origin. You might not pay any tax on them, but the taxing rights are still there. Now, be a little bit careful here. State pensions, strangely enough, are not classed as government funded. So they're actually taxed here in Spain. So imagine you've retired on a full pension in the UK. It's quite high now, isn't it? It's gone up a couple of times, for £12,000, give or take. There's no tax to pay in the UK because that's below your personal allowance, but you pay tax on that in Spain because the personal allowance is a lot less. Okay, so be aware of that. You will have a liability. They're added to your total progressive income in Spain as well. If it's not taxed, if it's like a police pension or some of these NHS pensions, they're not taxed in Spain, but it's added onto your progressive income table as well. Okay, tax resident in Spain, mentioned it once, mention it again, you pay your taxes in Spain. There are some exemptions, obviously, like all things, but for example, property income in the UK would be slightly different as well. Okay, a little bit about pensions. PCLS, pension commencement lump sum. So if you're taking what in the UK would be classed a tax-free lump sum, if you're in the US and you're taking a drawdown on your Roth IRA, etc., those are taxed as income in Spain. That's a big deal. Imagine you've got a very substantial pension, you move to Spain, you take what you think is your tax-free lump sum, and the hacienda will take a big chunk of it because it's taxed as income in that financial year. And of course, that's except the government funded pensions. Now, contributing, if you move into Spain and you think you're going to build up a pension pot, you don't get the same breaks as you do in the UK. The one thing that Chancellor Reeves has not really tinkered with just yet is the tax relief on contributions. So in the UK, it's really high. Here in Spain, it's very, very low. Check your national insurance contributions. Again, these kind of, are interlinked. So your government state pension, and seek advice, drop me a line, book a meeting with a professional, doesn't really matter, because there are ways once you move to Spain that you can continue to contribute your national insurance contributions in the UK at a reduced rate. So that would typically be class 2. Okay, a little bit here about tax efficient vehicles. So tax efficient vehicles in the UK, like ISAs, are there, to encourage people to save. Unfortunately, when you get to Spain, they're no longer tax efficient because they are taxed as a capital gain. So capital gains tax in Spain is between 19 and 30%. As of January 1st this year, they brought in a new category of 30%, which is for gains over 300,000. So if somebody's selling a property and they've made a significant gain, they're going to be paying 30% of that profit, even on your main residence, because main residences are not exempt from capital gains tax. Another thing, premium bonds, winnings from lotteries, everything, frankly, is taxed. And there are these tax wrappers don't exist as they do in your home country. So bear that in mind. And that's where a Spanish investment bond comes in, because that is the equivalent in Spain. I put there even bank interest is taxed quite heavily as well. The way that Spanish investment bond works, and again I come onto that in a lot more detail on a personal nature, but basically it reduces the capital gains tax right down, and you only pay the capital gains tax on the amount that you're actually withdrawing, and that's why it's tax efficient. Finally, I get asked this question quite a lot. I get paid as a dividend in the UK because it can be quite tax efficient to do that. Unfortunately, they're not recognised here in Spain by Hacienda, and it's just taxed as income. Okay, a little bit about the Spanish investment bond. It's taxed as an insurance product, hence it's very efficient. It's designed to be held between 5 and 25 years or longer. Can provide monthly income as well. So I've set quite a few up recently where clients are taking an income from their investment. It's very tax efficient because of that. Tax is only payable on the withdrawal amount. There's no tax on death benefits either, so it's an insurance product. Global investment, global providers, and they kind of start at a minimum of about 50,000 euros. So a little snapshot here about taxes in Spain. I'm a fully paid up member, so I know a lot about these. So first of all, we have it's talked about a lot in terms of wealth tax, solidarity tax. That's region specific. A little bit of history behind that is the wealth tax was quite punitive here in Andalusia. It started at 700,000 euros. And they did some analysis of the top 20 wealth taxpayers in 2023. 50% of them left the country the next year. So the government in Andalusia decided to do away with the wealth tax. That upset the federal government. So the federal government brought in the solidarity tax, which sits on top of that. But that's 3 million per person, plus you get an allowance for your main residence as well. And there is what we call a 60-20 rule. So it caps the amount you can pay, and there's a floor on the minimum amount you can pay. It's all based on your income. So there are ways to structure it. So if there's any high net wealth people concerned about that, there are ways around it. Modelo 720 is reporting of assets overseas. You probably saw a lot about this in the press many years ago. Huge fines if you didn't do it. People took the Spanish government to court and won. So Modelo 720 is any assets over 50,000 euros you have to declare that are held overseas. That's an important factor. You have to declare on your Modelo 720. You don't necessarily pay tax on them, but you have to declare them. Income tax, similar to most big countries around the world, on a progressive scale. Tends to be a little bit higher. I've done the maths for the UK, for Spain, for Portugal, for France. It's that Spain is a little bit higher than the UK, but it's not as high as France. So it kind of sits in the middle somewhere. And capital gains tax, as I previously alluded to, is staged. It goes up 19 to 24 and then 24 to 30% for the big capital gains. You've got property, kind of local taxes, just like you have in most countries. They're relatively low. Even if you're a non-resident landlord as well, there's not a huge amount in terms of taxes. Certainly my property, I pay like 600 euros a year for what is kind of like the local authority tax. Inheritance tax can be a problem in Spain. In some regions, like Andalusia, where I am, it's basically been abolished. So you get a 99.9% allowance. There are gift taxes as well. So if you want to try give money to another person, that can fall into a gift tax net. But it's done on what's called the heirship groups. So it's like kinship. So basically, husband and wife, no tax. When it's going down to the children, possibly some. If it's then going to grandchildren, possibly more. But like I say, it's very region specific. There's 21 autonomous regions, and it's different in pretty much every one. Some have pretty much got a complete exemption, like Andalusia. Sales tax, EVA, as it's called, again, similar to the UK, similar to some parts of the US as well. And of course, you've got exclusions on different things like baby products or medical products. Okay, so what's happened this year? This is a bit of an explainer on the changes that have happened. I mean, we're only into February, 8 weeks into the year, and already there's been some significant changes. And we'll come on to the property question, I'm sure, at the end. I'm sure that's going to be one of the first ones. EVA's increased on electricity and gas bills. That's an instant. So they reduced it to 4% during COVID, and then the kind of cost of living crisis. It's gone back up to 21%. So, my electricity bill first month of January has effectively gone up by about 15% on a like-for-like basis. They brought in this new capital gains tax bracket. I've alluded to that a couple of times. That will impact some people, but again, dependent on your individual circumstances, there may be ways to break that down into 2 tax years, depending on what kind of asset it is you're selling. So you could do what we call like a bed and breakfast type approach. Again, it's difficult when it comes to property because you're just going to sell the property outright. A little bit about Spain. So why should you move here? Other than the fact the weather is lovely, the beaches are great. I've got to say the services are very good as well. This is from a personal perspective. I've lived in, obviously, the UK. I've lived in the Middle East. I've been here now for 8 years. General services that come out of the town hall, effectively, streets are immaculate. There's always work going on. There's always improvements. There aren't 1,000 potholes. If there is one, it gets fixed. So all those kind of soft, fluffy things around the edges are really good. It's a vibrant economy. GDP growth last year, as the statistics were out only a couple of weeks ago, it's the highest in the Eurozone, 3.2%. That's at least 4 times the pace of the UK. In fact, it's probably more than that if you do the maths. So it's doing very, very well. Unemployment's quite low. I mean, it says 10%. If you're coming from maybe the UK or the US, you'll think, my God, that's massive. But that's come down substantially from almost 20%. And you've got to bear in mind a lot of the unemployment is in the interior and in perhaps more remote parts of Spain. So for the fact that it's got down to 10% is really good. And that's the lowest since 2008. There's 48 million residents and it's rising. So 600,000 people a year in terms of increase in population, and 21 million of those are working, employed, paying taxes, and that's rising as well. So a couple of things here to consider about your move. You've got this all in your head and you're going to move to Spain. This is not a particularly long list. There are lots of other things, but here's some kind of important ones that I see people falling wrong on many occasions. So obviously you need to talk to the guys at Your Overseas Home and Smart Currency to minimize that risk and get the best bang for your dollar or your pound or whatever it is you're transferring. Do not use a bank. I've said this so many times. Some people still do it, and they're just handing tens of thousands of pounds to the banks unnecessarily. Book a meeting with us, myself, or another professional company. Whatever it is, at the end of the day, you've got to seek some advice. I always suggest people do it about 6 months before you move, so it can give you time to consider things and to get some planning in place. Now, if you're coming from the UK, actually, if you're coming from pretty much any major developed country where you get residence allowances for your property, sell it before becoming a tax resident in Spain. And that's to avoid UK, in this instance, capital gains tax, because you get a 100% allowance against your main residence, or you don't when you come to Spain. Consider your assets. Again, this, financial planning and talking to us or talking to somebody else. Consider all those different assets. Consider liquidating them if necessary, but take advice, because some things you might want to action before you leave the UK, others after you leave the UK. But when you get to Spain and you've got your address sorted, etc., that's when you can be talking to us about how best to put those into a tax efficient wrapper for Spanish residents. And finally, well, not finally, I've got another page, but PCLS, I've spoken to it about it before. Your pension commencement lump sum, it's tax-free in the UK, it's not tax-free in Spain. So consider taking that out before you move. Inform all your institutions of your new address. Sounds obvious, doesn't it? You wouldn't believe how many times people don't say, "Oh, I didn't think to inform my insurance company or my life insurance company or my bank or whatever it is." And the banks can be a bit tricky, so you may have difficulty with some of the banks. Depends on their licensing and whether they've got MiFID II permissions in Europe. An important one there, I've mentioned it about life insurance. Always write to your life insurance company telling them that you're moving to Spain and confirming that cover will continue. 99.9% of the time it should be, and it will be, but you have now advised them of that, and you've got a piece of paper back saying, yes, that's great, enjoy the sunshine, put that in a filing cabinet. Complete HMRC, notice of leaving. It's the same if you're in the US, IRS, that you're basically leaving the country and you're no longer going to be paying tax in that country. When you get to Spain, update your will, really important, because it can be a minefield, as it can be in most countries, quite frankly. And there's a really good system in Spain where all wills, every single person's will is held centrally, and any lawyer can access that will with the correct permissions. So it's a really good system. There's none of these kind of envelopes that are, in your safe at home or at your solicitors or whatever it is. And also update your will in your home country as well, if necessary. That's really, really important. And I've put here as almost like a final point, really, is to calculate and monitor your tax liability for inheritance tax. There's lots of talk in the UK. I am continually talking to people who want to leave the UK, basically because of the changes in inheritance tax, in non-dom status, in national insurance, all these kind of things that the Chancellor Reeves seems to be getting her claws into. So this is something that would be worth looking at, because there are some opportunities. So the changes in the law making IHT a residence-based test means that any assets held outside of the UK, even if you're a UK citizen, won't form part of your IHT liability in the UK. However, they will form part of your local country liability here in Spain, for example. But like I say, in a lot of places, there isn't any. Okay, that's how you can get hold of me. You can book a meeting. I do a free consultation for 30 minutes. You can, if you're tech savvy, you can scan the QR code. If you're on a PC, etc., you can copy paste my email ID. And if you're a bit old fashioned like me sometimes, you can write down my phone number, and I'm available there on WhatsApp as well. Chris, over to you.
That was really comprehensive and really easy to understand. Quite often we do these things, and I'm slightly lost halfway through, but I followed all that really well. So that's really fantastic.
Thank you.
Now, in answer to my question, where people are, where they're going, they seem to be in a swathe of southern England and Wales, all the way from Norfolk to Wales. But with a couple in the north too, and it's the same for where people are looking to buy. So people from going from Costa Blanca right the way around the south to the Costa del Sol, but you're also interested in some of you in the Basque area too. So that's an interesting mix there. So lots of tax jurisdictions there for Robin to get his teeth into when you book those consultations, which I really hope that people will do. So let's go straight on to that question about the new proposed property tax. What is it? Should we be worried?
Okay, good question. And first and foremost, it's 99% nonsense, and I'll explain why. So no, you shouldn't be worried. Yes, there is a housing crisis in Spain, pretty much like there is in every country. There's a shortage of housing, and the government are being pushed to act upon it. They brought in a proposal. It's not law. It's not even gone to Parliament yet. So the ruling party have brought in this proposal that they will tax foreigners 100% on property that they buy. But it's not been backed by the party. It's not gone to Parliament yet. There's no meat on the bones. They don't even say 100% of what, but digging down, and from the people that we know and the lawyers that deal with these kind of things at a very high level, the proposal is to increase the current purchase tax for property, which again, depending on what region, but it's about 8.5%. So in the UK, it would be your stamp duty. Over here, it's your transfer tax. It's about 8.5%. And they're talking about doubling, and this is it's not even a proposal. I have to reiterate that. They're talking about doubling that to what, 16, 17%. It will never happen. It's not going to happen at all. I can guarantee that, because it would cause an absolute collapse in the housing market. Now, there was a little bit of background on that as well, and so yes, but there's various allowances. You know, if you rent it out, and this is existing actually. What a lot of people don't realise, that there are all kinds of allowances if you buy a property and then you rent it out, particularly if you rent it out long term. And there's a sliding scale. So if you do 6-month contracts, if you do permanent contracts, if you do X, Y, and Z, you get various allowances from 60 up to 90% anyway on the tax. So it's nothing to worry about. It's gone nowhere. Unfortunately, it's one of those things that gets picked up by Sky News or The Sun, and it makes headlines, and there is absolutely nothing to it at all.
Excellent. Okay, well, I'm glad we dealt with that. So Nigel is asking about the golden visa. He has been told by my Spanish immigration lawyer that the golden visa has been abolished and you can apply for permanent residency with simple proof of income at a fairly low threshold. I know you're not an immigration lawyer, but I'm sure you can answer that question for him.
Yeah, absolutely. I seem to spend all day long talking about this, if I'm honest. So your lawyer is correct on one point, but incorrect on the other. So the Spanish golden visa has not actually as yet closed. I was literally dealing with a client yesterday that we're pushing through. So the Spanish golden visa could closure for applications is the 3rd of April. Now, what that means is if you are trying to buy a residential property or something over 500,000, it's not going to happen. You're not going to visit, get your finance in place, buy the property, have it updated on the escritura, with the Casa del value, which is like the title deed, to allow you to apply for the golden visa. Not going to happen. However, commercial routes, and that's what we also do, is still open because it's quicker, it's more efficient, and we deal with a couple of providers who have got everything in-house. So it's still open for I reckon about another 2 weeks. Now, in terms of regular visas, if you wanted to come and live permanently in Spain and pay your taxes here, yes, those are still open. It's still relatively straightforward. Again, I've got connections with some good immigration lawyers. So people can come here on an NLV, for example, which is a non-lucrative visa. That's kind of one where you can't work, right up to digital nomad visas. And then there are different types of, well, there is one specific tax regime as well. Won't go into it too much, but the special tax regime, which is colloquially known as the Beckham regime, where you can get favorable treatment for up to 5 years. I hope, Nigel, that answers your question.
I think it does. Now, now you've already answered this question, but I'm going to ask it again just in case anyone was in any doubt. Paul says, I'm in Cardiff. If I take my 25% tax-free lump sum in May this year and then move to Spain on a non-lucrative visa in November, would I have to pay Spanish tax on this amount?
No. And you have a little bit of an opportunity because you don't file your taxes in Spain till the following year. So, for example, if you're in May, you actually wouldn't become a tax resident of Spain until late November. So you're in kind of no man's land anyway. It's a bit of a strange one. There are some opportunities, shall we say, when it comes to moving countries.
I see. Yes.
But 100% not. You've taken your PCLS when you're a tax resident in the UK. That's it, done and dusted.
Okay. Stephen is now he is buying a property in Spain, but he wants to spend fewer than 183 days there, so he will remain a UK tax resident. So what taxes will he pay in Spain? And he presumably capital gains tax on later disposal of the property. Exactly.
Yeah. So there's a non-resident. So presumably he's not going to be a resident. So first of all, he's got to consider what visa is coming on if he wants to stay more than 90 days. So don't forget you've got the 90 and 180 days, since Brexit. If it's just like a holiday home and that's okay to do, that's fine. So you won't be paying any taxes in Spain except for the ones associated with your property. So again, going back to that, the kind of council tax arrangement and anything else that goes alongside maintaining that property. So there's no tax liability, like Chris said, until you come to sell that property at some stage in the future.
Okay. Susanna has asked for a query on inheritance tax. She says, do you mean if a person were to inherit from a relative in the UK and send the money over, or would that be entirely payable or 99% payable?
So if you inherit, first of all, I mean, this is probably getting a little bit bespoke, but the way the inheritance tax works in the UK is the estate the estate pays the tax before the distribution of those assets.
I see.
Whereas in Spain, it's slightly different in that respect. However, what I was talking about here is that if you've got significant assets and you're living in one of the regions where effectively it's been abolished, if you pass away and you pass that to your children, for example, there'll be no tax liability at all. It's generally quite small anyway, because of the kinship group. But if you then decide that you want to go to the next generation, that's when it can get expensive, and that's what effectively has been abolished in a lot of regions.
Okay. Now we are well over time, but I'm just going to try and rattle through a few more questions if we can.
Yeah, of course.
Marilyn is in the US. We are planning stays of no more than 180 days per year at a property in Spain. Will our US Social Security be taxed?
No, you have no tax liability at all because you are not a tax resident of Spain. You're still a tax resident in the US.
Nice, nice and easy. Okay, Susanna, I'm in the New Forest. Okay, that's not entirely relevant, but thank you.
Nice, nice.
Yeah, it's gorgeous. And picking up your point about ISAs, in my case, stocks and shares, given tax benefits aren't in play, would it actually be better to cash the whole thing in the UK tax year before moving to Spain, to avoid taxable withdrawals in Spain?
Yes, it's not taxable withdrawals in Spain. It's tax on the whole amount. So yes, that is part of the planning process that we look at for our clients. Again, it's very general, but in general, it would be cash those types of products in. So you've got the cash in your bank, for example. You move to Spain when you've got your proof of address and you've got your TIE number, which is like your social security number. That's when we would look at putting those into a tax efficient vehicle for you. And that would, if needed, that would provide an income, for example. You don't have to it's just very flexible, really. So it's kind of like an ISA. It's got a tax wrapper around it, but it's just a Spanish version of it, which is actually provided by most of the big UK institutions. So people like the Prudential, Utmost Wealth provide them as well. Lombard, for example, as well.
Okay, I think we are going to have to call a halt there. We've got some questions about golden visas, but please do, if you're watching, do take Robin's details down and organise that free 30 minutes appointment, and then you can get all those questions answered. So well, to wrap up, just remind us why people should seek professional financial advice when they move to Spain, and when's the best point in time to do that?
Why? Because DIY financial services doesn't work. Like most things on the internet, there's always two sides to the coin. I've seen this on numerous occasions, and we don't charge a huge amount when it comes to fees and costs. And the analysis that's been done is that about 75 or 80% of people are significantly better off when they seek financial advice. And I'm not just saying financial advice. That's like, you wouldn't buy a property without going to the solicitor or a lawyer. You wouldn't file your taxes without speaking to an accountant, unless it's relatively straightforward.
Yeah.
And in terms of the time, again, I like to talk to people about 6 months before. It just gives them plenty of time. But quite frankly, it could be 3 months before the move. It's not a dramatic problem either way. But it's just to make sure those kind of things are being ticked off. The gentleman from Cardiff is taking his PCLS before he moves. Good advice, simple advice. So it's those kind of things.
Excellent. Okay. Now, for just a few more housekeeping things, don't forget our next Your Overseas Home virtual event is now only just over a month away. It's on the 22nd of March, where you can spend all day discussing all these aspects and speaking to lawyers, speaking to Robin, speaking to Smart Currency Exchange, all those people who can help you in your move to Spain. So I think a link should pop up. There you go. A link will pop up on your screen, and you can just click that and register for that. And if you found this session helpful, it would be really great if you would just stick a quick review. Only takes 5 minutes on Trustpilot. Get the word out. And other than that, it just leaves me to thank you, Robin, for all your really insightful tips and advice. We really do recommend you get in touch with Holborn Assets directly to discuss your requirements in detail. Thank you to Robin. Thank you to everyone who's tuned in, and good luck on your Spanish move. Bye-bye.
Thanks, Chris.